I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Seamus Rocca, CEO of Xapo Bank. Seamus, welcome to the show, and it is great to see you again.
Thanks for having me back, Ashton. Great to see you. Happy New Year, by the way.
Yeah, you're very welcome. And the last time we spoke was in the summer, end of the summer of 2023. That was just before Bitcoin just started taking off for what feels like months on end, and a huge influx into the crypto space. And now the ETF has happened. I would love to get your perspective on all of that. I would love to start off our conversation by, first of all, just giving a little bit of background to the viewers on your history in Bitcoin, blockchain, Zapo, and then we'll dive into all the latest details.
Yeah, no worries. Well, me personally, I have worked in financial services for the last 30 years, pretty much my whole career. I joined Zapo 6 years ago as the CFO in 2017. And 3 years ago, Wences stepped up to be the chairman, and I became the CEO. And the reason for that really was mostly around the evolution of Zapo. My background is mostly banking, and Zapo was born in 2013 as a Bitcoin custodian. We were one of the first wallets out there. For those people who remember, in 2016 we were the first Bitcoin debit card that came out before it got shut down. At one point we were the largest custodian of Bitcoin in the world. We had nearly 1 billion Bitcoins in our Swiss vaults, which we were famous for. And we wanted to evolve. We wanted to evolve from just being a custodian to say, look, Zapo is always going to be a really safe place for people to keep their Bitcoin, not only in terms of cybersecurity, but in terms of being regulated. We segregate all of our customer funds and what have you. We got plenty of capital. So that aspect was always something that we did well. But to evolve the product, we felt that, life gets in the way. People need to sometimes, unfortunately, as much as we love to hodl, if you're a Bitcoiner, and I am myself, you need to pay school fees. You want to buy a house. You need to pay rent, and you have to transact with today's world, not some sort of utopian future where we would rather wake up and that's where Bitcoin rules the world, right? So in the meantime, how can we make sure that Bitcoin becomes mainstream? Well, the best way to do that, and if we all love Bitcoin, that's what we want Bitcoin to do. We want everybody to be able to have access to Bitcoin and spend it, send it, receive it, invest with it. And we felt that the best way to do that is, alongside our custody business on the Bitcoin side, is build a bridge and build a bank. But it's not just any bank. It's the bank of for Bitcoiners by excellence. In that, there aren't any other banks out there that are going to help you custody your Bitcoin, keep it safe, and at the same time let you transact, buy stocks with it, buy the S&P 500 ETF with it, have a dollar savings account next to it that's deposit guarantee that applies to anybody in the world that opens up an account with us. So all those things to us felt like a natural evolution that was going to support Bitcoin in terms of growing, and at the same time take Zapo to that next level. The only hiccup we had along the way, Ashton, is that we thought we were going to do it in a couple of years, and it took us 5. But in 2023, we've kind of been slowly but surely coming back to the market, testing the product, and getting some wind in our sails. And I think 2024 is going to be an interesting year. Like you said before, the ETF is certainly an interesting development, and one that we'll talk about in more detail. But that's a little bit of my history, my role at Zapo, and what we've been up to for the last few years.
I love it, Seamus. And when I got involved in 2013, Zapo was actually one of the first companies that I had heard of as a top tier for custodying your Bitcoin. Some of the wealthiest clients that I knew that were getting involved in Bitcoin very early on, that was their choice. So, and I completely agree on the natural evolution of, it's great to be able to custody your Bitcoin, but especially high net worth individuals, they want to take that capital and utilize it, put debt against it so that they can invest in more things. That's what they love doing.
I think exactly. But one of the interesting things, Ashton, is if you bought your Bitcoin in 2016, 2017, which is when I bought my Bitcoin, they weren't worth that much money back then. Worth maybe $2,000 or $3,000. Before the sort of the bull run that took it up to 20,000 or whatever. So if you got 100 Bitcoin back then and you bought it for $500, for example, it didn't feel like that much money, even though you thought it was going to be worth something one day. So doing self-custody in a USB drive or your own laptop was fine. But if you got 20, all it takes is 20 Bitcoin today, and Bitcoin hits $50,000, and you got $1 million, right? Mm-hmm. And all of a sudden, when you look at your wallet and you see $1 million, you go, am I okay trusting the security of that $1 million to myself, or do I want to trust a company that has invested hundreds of millions of dollars in being able to do it for you, has never had any hacks or any issues, and has had up to 1 million Bitcoin in its vaults to keep them safe, right? And so at the end of the day, it kind of comes down to trust. And I think there are plenty of people out there, Ashton, that I will never convince that they need a product like Zapo. Not your keys, not your coins. I can do self-custody. It's not that difficult. But I think that is going to stop Bitcoin from going mainstream, because not everybody is comfortable with that. I've been in the industry for 6 years. I'm not comfortable doing my own self-custody, right? Because all it takes is one mistake and you lose your Bitcoin. And if you lose your Bitcoin, back in 2015, when it was worth a couple of $100, maybe it's not that big of an issue. But if you lose your Bitcoin now, we've seen some people crying on Twitter when they've lost their Bitcoin. It's heartbreaking, right? So I think that, there's an element of, if you want to do your own self-custody, that's fine. If you want to trust an exchange with your custody, that's fine. But there's an element of, well, most people trust other institutions with their money. Now, you're going to be picky about those institutions, because obviously some institutions fall over. But I think if you understand the institution, how it works and what they do, in our case, for example, doing Bitcoin custody, segregating your funds, we do the same on the dollar side. We basically just invest your dollar deposits into earning yield so we can pay you interest. So we're a very narrow, basic bank, right? But what we do is we give you Bitcoin superpowers, because you can do so many things with your Bitcoin, right? You could, at a click of a button, turn it into dollars and buy stocks. So it's another way of thinking about it is you're investing some of your Bitcoin, if you want to, into some stocks. If you want to buy Apple or whatever, savings accounts. Those are products that most people otherwise wouldn't have access to if you just keep it under self-custody, right? So I think that level of, well, I've got a trusted institution that can keep my Bitcoin safe and allows me to do all these things and give my Bitcoin superpowers. I think, part of our journey is to help Bitcoin go mainstream. So, that's our goal. We've been doing this for a long time now, and if Bitcoin does well, we do well, and vice versa. So even though, we're a bank, we're not any bank, we're a Bitcoin bank.
I love it. And you mentioned, all of these functions, it only made sense to implement them, but it's something that can't be done overnight, especially when you have a bank and you want to follow the proper regulations. And then Bitcoin is a new asset class, and it's like, it doesn't really fit into the documentation that's out there now. And we saw the same thing with the ETF as well. I think the first filing ever for the ETF, the Winklevoss twins, was like a decade ago. They wanted to, they knew we need to get this into the stock market, get this to traditional investors. And finally now we've seen 10 years later, it only makes sense. And, we sort of knew in 2023, okay, for sure, this is coming very soon. And it was almost right after our last conversation in the summer. Bitcoin was around 27,000, just under 30,000. And it was that first sort of initial news in August, like, hey, it's going to be listed for sure. They almost slipped up, like, oh, we're announcing early. But that sort of sent it on a skyrocket of FOMO, of people like, oh, we need to get some now before the ETF. In quarter 3 and quarter 4 of 2023, I'm curious on, how do you think Bitcoin did? Did you expect it to be, when an ETF was launching, around, it's just almost around 50,000. It's almost doubled since we spoke in the summer, which is pretty incredible for half a year. But I feel like that's sort of Bitcoin's nature, that it's unpredictably stronger than you think it will be.
Yeah. Well, I think I'm going to give you a slightly longer-winded answer, but, it goes back to what you said at the beginning, which was, it's taken us much longer to get to where we are now than we thought. And the reason for that is, there's still this apprehension with the traditional space around all things crypto. But if anything, for me, the most rewarding thing about the ETF is that Bitcoin stood out. You know,
Yeah.
for us, it's obvious to say that because Zapo's been focused on Bitcoin from day one. But I think there's a sort of vindication there for Bitcoin. But look, if we'd set out to set up a digital bank, Ashton, that does basic financial services, we would have done that years ago. Probably could have done it, with a bit of investment in 18 months, maximum 2 years, right? For us, it's been a much longer journey, and the reason for that is anything that you want to do, the moment you are speaking to the traditional financial world, all of a sudden it's like, oh yeah, but you touch Bitcoin. What about this? What about that? So we've really been at the cutting edge of convincing people that look, you can do it in a regulated way. You can do it, using anti-money laundering techniques. You can do all the traditional things that institutions do. You can do that with Bitcoin as well. But it's a long journey. So that leads to the moment of the ETF, which is, look, the ETF, in my view, is very much an institutional product, right? What it does is it provides access to fund managers and institutions that don't need to have the headache of custodying and holding their Bitcoin. They can just buy the share or the NAV of whatever ETF they choose, make it part of their portfolio, or even trade it, because the underlying is Bitcoin. You can short the share. You can do what institutions normally do in financial services if they want to be able to trade or have exposure to an asset class, in this case, Bitcoin. But it's very difficult for them to do it without the ETF. So very much the ETF is like, look, if you're a retail person like you or me, you can just buy the Bitcoin. You don't need the ETF unless you don't want the sort of the risk of the custody side, and you rather just have your share issued by BlackRock or whatever through their fund, which is also an incentive. But it's quite easy these days compared to 10 years ago to go over and just buy Bitcoin, right? But that's not the same for institutions. But I think that legitimacy that the ETF brings to the industry and to Bitcoin itself is a game changer.
I completely agree, and I'm hoping that some of the institutions, there's so much volume. I read over $10 billion in volume, which is like blowing all other ETFs in history out of the water. And you mentioned there, you can't short it. So it's not like the price has gone catastrophic since the listing. In fact, it's gone down a little bit, but the volume has shown that there's huge interest. I'm hoping some of those institutions as well maybe diversify and actually hold some Bitcoin, whether it's through a custody provider like Zapo or themselves or something. Because when you buy Bitcoin and you put it on Zapo versus buying the ETF, when you're with Zapo, you actually own the Bitcoin itself.
You own the Bitcoin, exactly. You have a legal right to your own Bitcoin because we're the custodian, right? So it's the same as if you bought an Apple stock and you're holding it at a custodian. Legally, that stock is yours. The custodian has that stock off balance sheet. Where it's the same with us, right? So it's your Bitcoin. We're just keeping it safe for you. But the difference between us and the ETF is that you can send and receive Bitcoin, right? So all of a sudden, it has that store of value component, which we all love about Bitcoin, but it also has that cross-border transmission mechanism that you can send and receive it. So that means that for us in particular, being an offshore bank that can send and receive Bitcoin, that means that we can accept customers from all over the world. It makes it a very international product, which is what Bitcoin by nature is designed to be. So the bank that we've built is not like a local bank. It's very much an international bank, which is akin to what Bitcoin does. But then if you think about the ETF, like you rightly point out, you're not really holding the Bitcoin, but you do have exposure to it. So of course, BlackRock and all these big companies, Grayscale, they're all going to have to hold Bitcoin in a custodian, right? Some of them hold it at Coinbase, some of them hold it at other custodians. But they have to hold that Bitcoin. And I think to some degree, I think there was this perception, well, they're going to have to buy a lot of Bitcoin. So, of course, the price is going to shoot up. Well, yes and no, because if you think about it, there is such a thing as over-the-counter transactions. So rather than just go to a liquidity provider or an exchange, which is what you and I would do to buy a couple of Bitcoin, if you have to buy massive amounts of Bitcoin, you're probably going to look for an over-the-counter provider where you can agree a price up front to exchange it so that you don't affect the price massively, right? Because you don't want to do, I'm trying to put myself in the shoes of BlackRock or Grayscale. I don't work there, right? But I know enough about financial markets to be dangerous, Ashton. But, if you're running that fund, to some degree, you definitely need to hold the underlying, right? Because that's what dictates the share price. But there's this dynamic where if the price shoots up too quickly, you're going to price out investors. So you almost want to make sure that investors go, well, I definitely want the exposure to Bitcoin. I want to buy a share in this ETF. But if the price had gone to $100,000 within a week, then all of a sudden a lot of investors would have gone, oops, it's too late for me. At that price, I can't buy the share. So actually, it's not the worst thing in the world. The price has gone down a little bit, and it's just hovering around that, over 40,000 mark. In terms of where Bitcoin goes from here, look, having been involved with Bitcoin for 6 years, I've stopped trying to even bother predicting price, right? But in my view, you just need to think about, as any investment, right? If you asked the master of investing, Warren Buffett himself, what's the number one thing you need to do with investments? It's just you need to have a 3 to 5 year period, right? If you're worried about what the price of Bitcoin is going to do in the next 3 months because you want to trade it, good luck. But I think, where is the price of Bitcoin going to go after something like an ETF announcement, after the halving or whatever else over the next 5 years? At least double, at least. But beyond that, it's like, what more do you want? If you want to double the value of an asset in 5 years, which I think that's super, super conservative for Bitcoin, what other asset class is going to give you that return?
Yeah, it's crazy, but it's almost, I don't know, people that have been in here for multiple cycles, they feel like it's almost like sky's the limit is a proper answer, because you just can't put a cap on what it could be, although there have been some crazy $1 million,
some crazy numbers
predictions. I wouldn't go past them to say that might not happen. It might not be in 3 years, but some of the smartest investors like Michael Saylor, all of these institutional investors, especially ones that are just getting involved at the ETF, they've been waiting for this moment. Yeah. They're definitely having long-term investment horizons, 3 to 5 years or longer. I've heard many 10-year plus investment horizons, and Bitcoin is still a baby, and I think it just hit its 15-year birthday. But even the supply, before the supply stops coming into circulation, that's like 140 years. And hopefully it lasts many centuries.
Well, look, I agree. It's super early. And I get asked that question a lot by friends, relatives. Oh, it's at 44,000. It's too late. And you'd be surprised, Ashton, how many people don't actually realize that you can buy a fraction of a Bitcoin. You don't have to buy the whole thing. But yeah, it's never too late, right? But you just have to have a 3, 5, 10-year view. It's almost like, here's an investment that I'm not going to touch for 3 to 5 years. And it's very difficult for me to see how you would lose money out of that investment. That's just my personal view. That's not sort of financial advice. But I think, to your point, look, if you ask me, I work in Bitcoin and the industry because I'm passionate about it, right? And if you ask Michael Saylor, even more so, he probably has the largest stash of Bitcoin in the world. At least his company does. But those, people like me, or I'm not comparing myself to Michael Saylor, but people who are in the industry are always going to tell you, yeah, Bitcoin's going to go to a big price, this or the other. For me, what's super interesting is that you're now starting to see large respected institutions that haven't really been known for being involved in the space, big international banks saying, yeah, this asset is going to go to 200,000 in the next 3 to 5 years, for example. And I think that all of a sudden, I think that's also a game changer, because you've got analysts out there who are looking at this asset class that they haven't really been involved with before, and looking at what's happening in the market and thinking, oh, wow, this could really be, something big. And part of that for me is, this institutional side that we're now seeing with the ETF as well, which cements it, is if you think about investment and trading in particular, If you asked any professional trader how and when they make the most money, it's through volatility. For traders, volatility is a good thing, right? When there's no volatility, it's very difficult to make money. So, I mean, that's one of the downsides people would argue at this early stage of Bitcoin, which is that it's very volatile. But if you're a trader, that's awesome. Right? You want volatility. So now all of a sudden through the ETFs, there are mechanisms out there for traders to be able to make money. Right? And if traders are making money, I can guarantee you that all the financial institutions want in. And if all the financial institutions want in, the price is going to go up. Now, we could sit here and be purists and say, the suits are coming and Bitcoin is ours and how dare they touch our Bitcoin, right? But hey, if the institutions help create legitimacy for Bitcoin and the price grows, and there are still companies out there like Zapo that care about making sure that Bitcoin is in the hands of retail customers that have got the same access, then I think we're in a good place.
I completely agree, and I love what you guys are doing and that you're still sticking to those principles. And you know what, I feel like most people almost everybody that has a Bitcoin prediction, they're already holding Bitcoin. They want, they have a personal...
A vested interest.
Yeah, they have a personal interest in having a high prediction. They hope it comes true so that they'll be wealthy personally. But it still has been, it was the top returning asset of 2023 and the last 10 years and all time. And I would, one of the things they say in the stock market is let your winners run and cut your losers to fill them in your winners. And Bitcoin seems to be that winner since its inception.
Every time. Yeah, and that's the thing. We all know about the Bitcoin is dead news articles the moment the price goes down. It's almost a bit of a running joke. But look, those of us that have that vested interest, like you say, want it to go up. Now, that's why, if you really want to get a sense of what's happening and what might happen to Bitcoin, listen to somebody that doesn't have a vested interest. So that's something that I do regularly, because otherwise you want to make sure that you're not in an echo chamber. If you follow Bitcoin groups on Twitter or LinkedIn, or you're constantly going to industry events, all you're going to hear is Bitcoin's amazing, the price is going up. And it's like we all pat each other on the back and go, aren't we the smart ones, That's great. There's nothing wrong with that, right? But sometimes you kind of got to do a bit of a double take and go, well, have I taken the blue pill here, or do I need to cross-check? And that's what I'm seeing that I think is super interesting. When you're seeing financial institutions that don't have exposure to Bitcoin saying this asset could be worth X $100,000 in the next few years, I think that's fascinating. That's when you know that we're in a completely different space in Bitcoin today than what we were 2 or 3 years ago.
It's funny though, because if you look at an unbiased opinion and then they come to the conclusion that, Bitcoin is going to do really well, well, then all of a sudden they probably will gain a personal interest in it. And then, they'll buy some. And then all of a sudden it's like, well, it's hard to, I know there are some Davos guys for sure that are still against it. They think that it will be worth less than it is now, or that, it won't succeed. But once you have an interest in it, it's hard to find reasoning in the other conclusion.
Well, I think that what I think is also interesting is that even those that have been the most vocal in terms of being anti-Bitcoin, I guess probably the most famous is Jamie Dimon. I'm sure there are others, I'm not picking on Jamie at all, but JP Morgan is still going to be interested in getting a piece of the pie and figuring out if there's money to be made. They're going to make sure that they're at the table. So even those, and we all know that JP Morgan is involved in trying to distribute the ETF and through brokers and whatever. So that's another example of, even though you might have your doubts about Bitcoin, it's now got to that point where it's impossible to ignore. Because even the doubters are saying, well, actually, I'm not sure about this asset class, but you know what? Just in case, I want a seat at the table. So from that perspective, you've got to think, well, even the naysayers want a seat at the table. Those that don't have a vested interest are saying, actually, in this asset class, it could go to 200, 250,000. And then, of course, there's all of us who love Bitcoin in the industry it's going to the moon, right? But it's when you have that balance that it's not just the echo chamber, and there's people outside of it that even the ones that are the doomsayers are trying to get a piece of the pie. you got to think that we're on the right track. And I think that, if you think about every other bull run, there was never one thing that triggered the bull run. Not that I can remember from the three that I've already seen. There was always I always have this analogy. It's almost like a catapult, when you're constantly pulling on the ratchet to build a tension. And eventually, when there's so much tension, the thing just goes. With Bitcoin, it's a little bit like that. So people thought it might be the ETF. It hasn't yet. Others might think it's the halving, and it might not be. But there'll be a point in time, and I can't tell you whether it's in the next 12 months, 18 months, or 24 months, but not more than that. At some point over the next couple of years, that catapult, the tension will just release and it'll shoot. And what's super interesting about bull runs, isn't it, is that when the price starts to go up, that's when people start knocking on your door saying, hey, this thing's going up. How do I buy it? It's like nobody buys it when it's at the low. Everybody wants in when it's already doubled in value. It's crazy, but it happens every time.
I know. And that's why you have to have that 3 to 5 years and
Exactly.
Understand that in this next bull run, it's almost inevitable that at some point it will be above the all-time high will go past and it'll be a new all-time high. And if you're looking at it now, it's a fire sale at 40,000. So yeah. I'm excited to see what's to come. I know the halving event and what is to play out with the ETF are the two things that are sort of on the top of my head right now. Looking forward to seeing how that plays out in 2024. What are you and the team at Zapo sort of planning?
The other thing, Ashton, just there's one more thing that I think is not trivial that I would add to that, which is the US election. Because I think it's been pretty clear over 2023, even though we don't run a US operation, but it's been pretty clear that the US took a massive anti-crypto stance. Silvergate and other banks got shut down and suffered as a result, and obviously the SEC took a very hard stance. So it's been a sort of a very negative 2023 from a regulatory perspective, and one would argue that the SEC approved the ETF through bated and choking breath because they had to for legal reasons, right? But a Republican administration might have a very different view on crypto, and that might be another interesting development where the US all of a sudden turns around and goes from being anti-crypto to being to favoring crypto again. And I personally, well, I don't have a view on which political party comes in. I'm not American, no, but I would love to see an administration that is pro-crypto, because I just think, the US being the largest economy in the world, if the US supports crypto, then I think that's another game changer. That wouldn't be the thing that creates the bull run. But again, to my sort of ratchet of the catapult analogy, that would be another big tension creator that would help create the next bull run.
Yeah, no, I completely agree. And usually running up to an election is always good for the stock market. And with Bitcoin more now ingrained in traditional finance through the ETF, I feel like that will definitely trickle into Bitcoin and correlate them a little bit more. So it's just a melting pot of different things getting ready for the next years to come. So that's amazing. And we don't have a lot of time left, Seamus, but I was asking you on, what are you and the team going to do to prepare for this melting pot in terms of helping more people, getting more people involved in Zapo, and providing the services that they need, and forecasting what other services they might want in the future?
Sure. Absolutely. Well, look, 2024 is going to hopefully be a great year for us, because the product that we'd envisaged is pretty much almost there. So in 2024, we want to have a couple of that we feel would complete the product. One of them would be the ability to draw down dollars on your Bitcoin in your vault. So, like I said before, if you hold Bitcoin, I hate the idea of having to sell my Bitcoin. But sometimes I need to borrow cash, and maybe drawing down some cash against Bitcoin as collateral might solve that problem if it's short term. So that's an interesting product that we think customers might be interested in, that we want to bring out this year. And the other one is, we pay interest on a savings account for Bitcoin at the moment, and we do that by using our own Zapo coins, and we go out to other institutions, we lend, we earn yield, and we pass on to the customers without touching the customer coins. We're just doing it to test that product, and we've seen that there's demand for it. So the next step for us there is, how can we create a product like that that scales? And for me, the best way to do that is DeFi. DeFi up until now has been very much a sort of a very much Ethereum smart contract based technology protocol. But you've got wrap BTC, you've got other things that are out there that are trying to bring Bitcoin into the fray. And, if people come to a bank to earn interest, well, if we're a Bitcoin bank, what can we do to help our customers earn interest in a way that is safe, transparent, and that we can be open kimono about how we do it, rather than promising thousands and thousands of percents of return and taking undue risk, right? So with those two product features, I think it's almost complete, to the wealth part of the product. We're going to add the ability to buy ETFs. Not a Bitcoin ETF, of course. You don't need to. If you're at Zapo, you can buy the Bitcoin itself. But if you want to diversify, maybe you want to buy the S&P 500 instead of having to buy individual stocks. You can buy an S&P 500 ETF, or you can buy a fund that gives you exposure to certain asset classes. So we want to make it easy for our customers to invest medium to long term. That's what Zapo is all about. So of course, Bitcoin is the core, but you can divest into other products. So with that, we got the products that are complete. So the next thing to do is, how do we get the message out there that, look, Zapo's back, this is what we do, and we're here to serve people who've got Bitcoin. So you'll probably see us a bit more visible in media, in events. The events that we know are very much focused on the crypto industry and the Bitcoin in particular, Bitcoin industry in particular. So I think you'll be seeing a lot more of Zapo in 2024.
Very exciting, and I love those product lines, and I think DeFi and other utility for Bitcoin will be huge, and I think the institutions will want to get involved in that eventually as well.
Absolutely, and I think, look, we really want to make Bitcoin easy for our customers, right? So in the same way as we do the custody, so you don't have to. We invest millions of dollars in keeping your Bitcoin safe from hacking, from everything else. It's a little bit like that with DeFi. Our treasury can get your Bitcoin, wrap them, deploy them to Aave, and then just give you the return. You don't have to go into MetaMask and worry about security. It's like, so what that means is that it makes Bitcoin mainstream. Why? Because my mum could use the product. You don't need to be a technical expert to be able to do self-custody. And that's what I mean by going mainstream, right? Not everybody's willing to take the risk or knows how to deploy their Bitcoin to wrap BTC and into Aave to generate yield. You don't have to. Zapo will do that for you, right? So I think that, we want to be that trusted partner to people who have Bitcoin and say, look, not only can you trust us with your Bitcoin to do all these services for you and make your life easier, but it's going to give your Bitcoin all these powers that it wouldn't otherwise have if you were just holding your private keys safely under your bed.
Very cool. I'm looking forward to it all. I would love for my mom to use Aave, and if she's on Zapo and it makes it easier, then the power to it. So
awesome.
Thank you so much, Seamus, for coming on.
Thank you, Ashton.
Your insights into Bitcoin are phenomenal. I appreciate what you and the team at Zapo are doing to bring these kinds of products into the world for Bitcoin, bring more utility so people can not just hodl their Bitcoin, but actually utilize it and use other financial products with it without having to sell.
Yeah, absolutely. Thank you very much, Ashton. Always a pleasure to be on the show.